We've created a framework for the two leaders to discuss on Thursday in Korea.
Treasury Secretary Scott Bessent there speaking as U.S. and Chinese negotiators tee up a trade deal to be finalized by Presidents Trump and Xi Jinping later on this week. You're watching The China Show. I'm Yvonne Man with David Ingles.
A very good morning to all of you. We are kicking off a big week in our brand new studios here in Hong Kong. We're counting down to the open of trade, Hong Kong, Shanghai, and Shenzhen. Let's get to your top stories today. It's risk on across these markets as investors cheer progress toward a wide-ranging trade deal between the U.S. and China.
At the heart of that agreement are Chinese purchases of U.S. soybeans and the flow of critical minerals. Those details to be finalized in Thursday's expected meetings between President Trump and Xi.
Meanwhile, South Korea's president tells us that talks with the U.S. on a $350 billion investment plan remain stuck on all major details.
미국의 이익을 극대화하고 싶겠지만
The US will of course try to maximize its interests, but it must not be to the extent that causes catastrophic consequences for South Korea.
And I'm Avril Hong in Kuala Lumpur for the ASEAN Summit, where President Trump announced a flurry of other deals with partners in the region. We'll have the details coming right up.
All right. Same show, new set though, Dave. Come on, we're very excited about it to really long-awaited sort of revamp of our Hong Kong studios here. If we could just do a bump shot of just how big it is and a big sort of labor of love when it comes to our New York team that flew in the last couple of days to really get this going. And yes, we've thrown away the podiums.
Yes.
We're back to a nice, beautiful desk and of course plenty more to cover here this week. It is a big, big week when it comes to macro risk and events.
It's almost like we did it on purpose.
We did, actually.
So what happened was on Friday, it was the old set, breaking news, and then we rushed everyone in to get... That's, of course, an exaggeration. We can't wait to tell you all the stories from our brand new set here. Some of the stories you want to hear, some of the stories you don't want to hear. But that is, of course, what we do here. We're looking at these markets, and certainly just perfect timing to be able to leverage off what we have right now, to tell the world the story right now. Big, big week ahead, of course.
Yeah, the tee-up, as we say, right?
Yeah.
It looks like those 2 days in Kuala Lumpur were quite fruitful for the U.S. and China. There seems to be some consensus when it comes to likes of soybeans, fentanyl. Export curbs, I think that's one thing we still got to see what really happened there. But certainly markets are really liking what we've heard from Malaysia here, of course, as Trump heads to Tokyo soon.
Yep, in a couple of hours, we'll get to that in a moment. As Yvonne is pointing out, what a day to be long these markets right now. In fact, I'll be back in a moment there with Yvonne. Let me just step aside and have a look at these markets right now. And
show
of course, our first opportunity to show off our new set. And you know what? What we've done is we've taken markets and we've taken them at record highs. That's our starting point today. Asia Pacific benchmark coming up on your screens. Dollar, and we're looking at the Aussie and the yen, a gauge of risk appetite right now. As you can see, it's risk on across these markets. Dollars on offer. Bond futures are on the way down. A closer look at equity markets. Nikkei, Kospi. Nikkei's at 50,000. Taiwan is coming online. U.S. futures bottom of the screens. It's green across your screens right now. No better way to look at risk appetite right now. Away from equity markets, it's really in commodities, right? So you have a massive pop as far as oil goes. Copper should be opening up as things stand. And there was actually a chance when you look at sort of the copper contracts traded in the U.S. that we could actually see, and we are very close to a record high, very close to a record high in LME copper right now. This divergence between Bitcoin and gold, something to watch, of course, very closely. Within the equity complex, we are already seeing that, in fact, play out. The approach to the open today, so we had a challenging week for the most part of last week. Good end to the week. It looks like we are set for a rally here today. A50 futures are called about 9% to the upside. Of course, as we talked about, oil's also catching a decent bid today on the back of all the news, encouraging news. Let's see how things pan out, of course, out of the weekend, out of the ASEAN meetings. Yvonne.
It is a perfect sort of setup, as you say, for markets. And I think people are really looking at now APEC as possibly the final signature, really, from Presidents Trump and Xi on this trade deal that seems to be really ironed out over the weekend here. And as we talk about these top trade negotiators from both sides, they say that they have come to terms on a range of contentious points. Now, it does set the table for when the two leaders meet to finalize that deal at the meeting this week. Take a listen.
President Trump gave me a great deal of negotiating leverage with the threat of the 100% tariffs on November 1st, and I believe we've reached a very substantial framework that will avoid that and allow us to discuss many other things with the Chinese.
All right, let's bring in our reporters. Avril Hong joins us out of KL today, and of course, Min Min Lo here on set with us here in Hong Kong. Avril, let me start with you. That's really where all the news was on the weekend going into this morning, and hence why we're looking at risk assets rallying quite hard, and we'll see how long this lasts. Get us up to speed. What was agreed on? What do we know?
Well, there was really a flurry of activity over the weekend. I mean, coming into this weekend, there was still that overhang about the Trump-Xi meeting, right? Will they or won't they meet in South Korea? And then a number of sticking points, given how they ratcheted up the pressure. We saw how earlier in the month, Besson called the top Chinese trade negotiator, or one of them, Lee Cheung-gang, unhinged. So there was a lot at stake coming into this weekend. And then there were this flurry of optimistic activity coming out of Malaysia. 2 days of trade talks between the top US and Chinese trade negotiators. On the US side, led by Scott Bessent, Treasury Secretary, and on the Chinese side, He Lifeng, the Vice Premier. And these talks that took place in Merdeka 11A, which, by the way, second tallest building in the world, the idea behind that is to really tee things up so that their bosses on Thursday, when they meet in South Korea, can seal the deal, finalize a sort of trade agreement. So some of the key sticking points that have been cleared out of the way. There's been optimism about some resolution on fentanyl. Importantly, we're also hearing about increases of soybean purchases. And of course, when it comes to rare earths, optimism that there will be a delay in the restrictions coming from the Chinese side.
Yeah, that certainly seems to be why we're seeing most of the relief across these markets, I think, just given that was what led to the recent flare-up, Min. But tell us from basic readouts that we're getting from state media and how they're covering what happened in KL. What's the message that China is sending so far?
Yeah, it's definitely a very positive tone from China. I mean, you just look at the visuals out of the Malaysia talks. You saw He Lifeng coming out, big smile on his face. He walked past the reporters, didn't talk to them, but looking very upbeat. And also the same photo with a big smile pasted on that official readout on Xinhua News as well. And the Chinese side is saying they reached consensus on a number of issues beyond what Avril mentioned, the soybeans and fentanyl. There was also shipping levies that was agreed upon. And you read between the lines when it comes to fentanyl, if they said that they agreed on something there, it could mean potentially either a reduction or removal of that 20% fentanyl-related tariffs. And the tone, again, very positive. You look at some of the editorials on Global Times, for example, quoted something from President Xi himself saying that both U.S. and China are capable of helping each other succeed and prospering together, and that the achievements are hard-won. These turbulence are not something they want to see again.
Yeah, markets are trying to figure out what and of the multiple angles to trade on today. Avril, before I just get to you, I just want to also mention that Taiwan is coming online, as we mentioned at the top of the show. 8 minutes into the session, they were already up 2%. Marco Rubio also commenting that the U.S. will not change its Taiwan policy in exchange for a China trade deal. Speaking of, Avril, what other deals were announced out of ASEAN?
Yeah, I mean, Trump really got busy while he was here on Sunday. He leaves, by the way, for Japan in the next hour, as we understand it. And the flurry of activity in terms of not just trade deals or trade frameworks included for the likes of Thailand, Cambodia, Vietnam, Malaysia as well. And what stands out from that is not just the deal making, that activity that is going on, but also how this is really part of the drive for the U.S. to secure the supply chain when it comes to critical minerals, because we did hear about some of these engagements with the Malaysians, for example. They have been looking to move up the value chain when it comes to critical minerals. But what do they need? They need investments to do that. So there have been positive developments in that regard. But when it comes to some of these deals, it's really about the devil being in the details as well, because of course there are a couple of other sticking points. For example, for Malaysia's deal, it needs to commit to that purchase of $150 billion of US goods. For the Cambodians, even though they're hearing of these exemptions for some of their goods, they're still hopeful of holding out that garments will be exempted from tariffs. And this, don't forget, is accounting for about 50% of Cambodia's exports. So there are a number of details that still need to be filled in at the moment, David.
Team, fantastic. Thank you so much. Avril Hong there in Malaysia for us and Min Min Lo here on set. As we approach the open, 20 minutes away, we're looking at futures pointing to some decent upside right now. 0.8 of 1% on A50 futures. Some strength coming through in the Chinese currency. Markets are initially loving this, dare I say. Jason Lui is here with us on sets, head of APAC Equity and Derivative Strategy at BNP Paribas. Does the market reaction make sense to you at this point?
Yeah, absolutely. I think if you look at the price action over the past few weeks, certainly in the Hong Kong market, that we've been going through a roller coaster ride in terms of the US-China relations. And especially when you look at the technology side of things, like we've seen Hang Seng Tech did incredibly well in September, and it's given back almost half the gains for about a week and a half. And we're starting to see a little bit of that recovery towards the end of last week. And so hopefully today, with a little bit more definitive positive news, that will be good. But what's more interesting to us is on the Asia market, that on a point-to-point basis for the entire month of October, despite all the volatility between US and China when it comes to geopolitics, the market is actually flat to small up. I think that's something we briefly discussed last time when we talked about this kind of so-called slow bull market in the Asia.
Yeah, you mentioned the slow bull market. What do you think is essential to providing that stability in that Asian market now? And what part of the market is most?
Sure. I think when we talk about slow bull, it's mostly focusing on the onshore market. And the key here is about asset reallocation. I think it's been well understood in the market that the onshore risk-free rate will remain quite low for some time. And so there is this desire that the onshore household needs to move the money into something that's a little bit higher yielding. And so in order to encourage that process, the policymakers hoping to create this equity asset class that is something stable enough where the household can put money in the medium to long run. We have seen some of that happening being on the ETF buying by the national team. But more importantly, we want to see some of that happening from a policy clarity standpoint. And so the fourth plenum last week actually provided some interesting kind of guidelines in terms of what to expect in the next 3 to 5 years.
Well, tell us about that from the fourth plenum. What was the takeaway for you there?
Sure. I think for us there are two, perhaps something worth noting point. Number one, even though it's not a usual topic for a fourth plenum, the government did acknowledge or commit to fulfill the full-year target for growth. And I think that is a positive surprise because previously the market were more thinking about what is it going to be in the 5-year plan rather than anything immediate. So with that statement included, we are of the view that there could be some easing between now and year end, likely in the form of 10 basis points in the risk-free rate. The other one that is interesting for us is this recommitment to high-tech innovation, and that has been a major theme for both the Hong Kong market and the onshore market. So I think having that medium-term to long-term visibility should continue to allow the investor to feel a little bit more positive about the market.
If it's about tech innovation, a lot of these homegrown giants or, the ones that they're trying to at least nurture and build, I mean, they're trading at very elevated levels here right now. I think we talked about some of the chip names as well. Can we still stay on those kind of group of stocks, or where do you tilt to now?
I think when we talk about the tech investment thesis, we have to divide it into the hardware and the software part of things. I think on the hardware part, you're right. Like when we look at a lot of the leaders in the China onshore market, they're trading 40, 50 times or even higher PE. But that's also a reflection that the starting point for China's hardware side is quite low. And so investors are hoping that in 3 years' time, they can at least close the gap with some of the global peers. But when we look at the software side, the AI application side, this is where we think could be more opportunity, at least in the near term, which is the Hang Seng Technology Index, where the index itself is trading roughly 20 times forward PE for the next 12 months, actually below its historical average since the inception back in the 2020s. So I think that is an interesting entry point when it comes to the valuation discount versus its own history and also versus some of the more, expensive peers both in China and outside of China.
Since you mentioned Hang Seng Tech, you alluded to this earlier on. There was a wobble last week in momentum/growth. There's an overlap between the two. Do you think that's back? What do you think happened last week?
So if we probably take a step back maybe last 2 weeks, because when we noticed that you had that peak to, I guess, trough retracement of quite a meaningful amount, I think a couple things happened. Number one, there were a lot of gains that was concentrated around September, especially when it comes to Hang Seng Technology Index. Number two, we actually saw a rotation from these kind of high growth sensitive stocks to value stocks.
Yeah.
If you look at the month of October, the high dividend stocks in Hong Kong actually done very well. We have a basket of high dividend stocks that actually posted a 6% return month to date, whereas the broader HSI market is actually down about 2%.
Right.
So you have this kind of rotation from growth to value or to dividend yield, which we thought would happen in December, but now it seems to be a little bit earlier. But now with this positive news flow over the weekend, then it is possible that part of that money will rotate back. But on an international level, we also seen something quite interesting. So when we look at the ETF listed in the US, despite the drawdown, we actually see money inflow into the China ETF.
So the K-Webs of the world.
That's right.
Okay.
That's right.
Is there anything to suggest that this calm is going to last? I mean, what are you looking for in particular, maybe at APEC, on this whole grand bargain that seems to be ironed out, to really kind of add more conviction for you? What specifically are you looking for in this trade deal?
I think the expectation of this particular meeting has evolved quite a lot over the past few weeks.
Yeah.
Because let's say if we rewind the clock about 3 weeks ago, we're just happy that President Trump and President Xi are finally meeting in person. And then in between, we have both sides kind of increasing pressure in terms of this kind of trade negotiation. So I think part of that's been kind of eased up over the weekend.
Yeah.
But I think before the market to get more comfortable, we hopefully want to see a little bit more concrete. You may recall that U.S. and China have done multiple rounds of trade talk, and the market has not actually seen the actual agreement. We've seen statements from both sides, but we actually haven't seen the actual agreement. So if President Trump and President Xi can deliver an actual statement on the terms that are being agreed upon, I think that would provide more comfort to the market.
Okay, Jason, we got to leave it there, but thank you so much for breaking in our new studios.
Yeah, thanks for having me here.
Head of APAC Equity and Derivative Strategy at BNP Paribas here. We're going to bring you some live pictures that we're seeing when it comes to the Foreign Minister of China, Wang. He is speaking at the Lanting Forum on when it comes to diplomacy, global governments. We'll bring you some updates here on what he has to say, of course, as we count down to President Trump and Xi meeting at the sidelines of APEC there in just a few days there in South Korea. So big week, Dave.
Absolutely big week. We're counting down to the open of trade, the first one of the week. We're called Higher Cross Futures. 13 minutes away, the opening bell. You're watching The China Show. Good morning.
International rules should not be applied selectively according to one's own.
Welcome back. Good morning. You're watching The China Show. You're in time for the strongest renminbi fix in a year. In fact, first time I think we're seeing a 708 handle on the midpoint today. As you can see, we're looking at already some weakness in the dollar, even more so following the strong fix.
Yeah, perhaps potentially it could be a bit of an olive branch, of course, as the two leaders meet, set to be later on this week. So maybe this is a sign that China is keeping the currency at least strong before those negotiations and, of course, that final signing of that trade deal. Let's talk a little more about South Korea, because the president says that talks with Washington on a $350 billion investment pledge remain stuck on all major details. We spoke to Lee Jae-myung ahead of his Wednesday meeting with President Trump on the sidelines of the APEC summit.
한미 간의 협상은 이제 안보 분야.
The negotiations between Korea and the United States are proceeding in two areas of security and economics simultaneously. Negotiations in the field of security issues are going very well, but negotiations in the area of economics, especially trade, have reached a preliminary agreement, and we're in the process of hashing out the details. The discussion is ongoing and there are some differences of opinion, but the delay does not necessarily mean that this is a failure. We already have a comprehensive agreement, and we're currently working on the details. So I would appreciate your patience.
일본과의 협상에 있어서는 좀
When it comes to Japan's deal, there have been some divergent interpretations. Is South Korea trying to make it more specific than Japan's? And if that's the case, could that become more burdensome for Korea later on?
대한민국은 일본이 아닙니다.
Korea is not Japan. I do not fully know what deal the US and Japan have struck, but from our point of view, we have our own circumstances, and we will reach a rational result that suits us. Of course, the example of Japan or Europe could be a base that we can refer to, but in the end, we must find a way which takes into account Korea's circumstances, that is acceptable to Korea, and also helps the United States in its manufacturing renaissance. As we search for a mutually beneficial path, there will be differences as well as alignment of opinions.
접점을 맞추는 데 있어서는
In finding common ground, could the size of the U.S. investment fund become smaller?
투자의 방식,
The method of investment, the amount of investment, the timeline, and how we will share the losses and divide the dividends, all of these remain sticking points. The US will of course try to maximize its interests, but it must not be to the extent that causes catastrophic consequences for South Korea. The United States is the leading country in the world when it comes to democracy and rationality. South Korea is an ally and friend of the United States, so we believe that we will be able to reach a rational result that is acceptable to all sides, and this is what has to be done.
이번 APEC이 또 부각된
A highlight of the APEC summit is the upcoming meeting between Presidents Trump and Xi Jinping. How important is this dialogue for South Korea?
한국은 지금 공급망을 둘러싸고
When it comes to the supply chain, the world is divided into two blocks facing off each other, one led by the United States and one by China. Korea is situated both geographically and economically between these two. We are situated in between two grinding stones. It's a situation akin to having both arms pulled by China and the United States. This is both a challenge and an opportunity. We cherish our baseline policy emphasizing the Korea-US alliance and Korea-US-Japan trilateral cooperation. At the same time, we do not seek to sever ties or pursue excessive confrontation with China or socialist nations. Korea will continue to cherish and emphasize its alliance with the United States, and at the same time manage its relationship with China.
All right, that was the South Korean President Lee Jae-myung speaking to our very own Sherry on a very, very big interview, of course, as we count down to APEC. And certainly, risk assets are right now looking very, very upbeat on this Monday morning, Dave.
Yep, a very good morning if you're along these markets. 1.3 to the upside on the Hang Seng Index. Plenty more ahead. This is The China Show. Good morning. Welcome back to the show. We're counting down to the open of trade. Risk assets are ripping higher. Our starting point this Monday is a record high on Asia Pacific. We're looking at the Nikkei for the first time, I think, ever. We're trading at 50,200. We'll see whether we close at these levels here.
Yeah, I think the vibe could continue when it comes to the China market open just minutes away here. We're already seeing futures popping here this morning on the back of this framework that has been set out between President Trump and Xi to sign at APEC in just a few days as well. And there you go. The open is coming up next. You're watching The China Show.
Welcome back. You're watching The China Show, counting down to the open of trade. 40 seconds away. Almost every single sector is up across the Asia Pacific. You have IT, industrial, cyclical. It's everything that's pro-risk is back on the table. We're watching gold as well going the opposite way and how that will show up across these Chinese markets once things open up in a couple of seconds. Also a very strong fix coming through out of the PBOC. So a lot to be encouraged about today, Yvonne.
Yeah, there's mojo behind momentum once again. We have a new set. What's not to be happy about, really? And I have to get used to talking to you from a distance now. Because
well, I'm not used to it.
I'm not.
Like, why are you so far away?
Usually we have much closer proximity, but right now we have so much to showcase here in our new set. The different corners of the market and corners of the set that we have to really show here in the next few days.
Flexing the real estate.
We count down to APEC. So certainly the good news and good vibes continue here today on the China Show. you take a look at how these markets are set up and opening up, it is looking to be a very, very good one here. So we saw the records are still set here when it comes to Asia. China right now seems to be adding to that here as well. When you take a CSI 300, we're up 0.8% here right now. Yields are on offer here. 30-year yields are up 1 basis point as well. And you're seeing commodities are bid up. Copper, steel, iron ore, Shanghai are all catching a bid here this morning. Interesting enough, you're watching, of course, some of these chip names like Capricorn. The local names are doing quite well. Take a look at Capricorn. We're up 2% here at the moment. CATL A shares are also up 1%. So tech should actually do very well in the face of this, because we mentioned about what was reached in terms of a consensus, right? Whether it was shipping, fentanyl, soybeans. What perhaps was not mentioned as much, or perhaps maybe is a good sign for the market, is that we didn't hear too much about AI or technology, right? And what these export curves are going to really lead to. So that certainly might be a sign of maybe the good times can continue for at least now, right? Let's take a look when it comes to Hong Kong. And this is what the open is looking like. HS Tech, we talked about already seeing a massive bid in the pre-market. There you go. We're up close to 2% here right now. And you are seeing, of course, Alibaba up around 174, 175 bucks here right now. Baidu's up some close to 3%. Tencent also up 1.5% here. So certainly tech could be the key beneficiary right now, and certainly the most sensitive sort of sector to any sort of trade headlines we're going to get for the next few days. Keep in mind, watch the renminbi as well, right? We had the strongest fixing from the PBOC in about a year. So at least when it comes to what the PBOC, what policymakers are doing, is that they are keeping this currency strong in light of these kind of trade negotiations. So maybe it could be a good olive branch here. We're hovering around 7.11 levels for dollar China here right now. And some of the boards watch sectors in particular. So rare earth certainly is in focus here. So the U.S. has said that China will defer when it comes to those export curbs around rare earths, right? We're still waiting for maybe confirmation on the Chinese side of that. You see some reports where the readouts on the Chinese side may not specifically confirm that, though. But then again, you are seeing some of these rare earth stocks are doing quite well here today. We're also watching everything from soybean, fentanyl, and shipping stocks, right? These were seen to be the ones where we did reach some sort of agreement. A mixed picture here right now, but we're certainly watching some of the shipping stocks, agriculture, soybeans, and the like here. But what is really clear is what we're seeing is this unwinding of havens here, right? Whether it is the Aussie yen pair, where you are continuing to see a bid on that pair. But then again, gold is getting a bit of a sucking, sort of sapping sound here, because it seems like it is a little bit more risk on here right now, right? So you are seeing, when it comes to the gold miners there, marginal losses, though. I mean, in fact, Laopu Gold is still doing quite well here today. But take a look at some of these China gold ETFs. We are seeing a slight selling off here right now. So that certainly is a good indication of where risk assets are going to go for the rest of the day, Dave.
Yeah, you know what? I'm still getting used to, number one, because of this new set. Here's another flex. I'm still getting used to my new chair. The other thing I'm still getting used to saying is actually gold might actually break below 4,000. So like lots of things to watch here as well. Also just breaking right now is industrial profits. And here's an exciting number for you. 22%, I'm calling it even, 22% year on year. That's for September. That's the highest, fastest growth clip for industrial profits going all the way back about 2 years or so. So that story might also be the low base. Keep in mind, might also be the low base, also playing out as far as that is concerned. Anti-involution. This is a conversation we've had, of course, around those lines as well. Now, back to our top story today, and as Yvonne is pointing out, right, rare earths is just a very good example of look at what the U.S. said, look at what the Chinese side said, or maybe the lack of details on that side, look at what Chinese media are saying. Do you split the difference until we get more information from both sides into really what that story looks like? So, in other words, we did hear from Scott Bessent, of course, and he said that they have come to terms on this range of very contentious points, which is a good thing. Have a listen.
Those soybeans were always going to be on the market. It's a global market. The three leading suppliers are Brazil, Argentina, and the U.S. And I believe that we have brought the market back into equilibrium. And I believe that the Chinese will be making substantial purchases again. I'm also anticipating that we will get some kind of a deferral on the rare earth export controls that the Chinese had discussed.
Okay.
But again, this will all be, my counterpart, the Vice Premier, and I have set the framework, and it will be up to the two leaders to discuss the final terms.
Well, joining us now from Virginia is Scott Kennedy, Senior Advisor and Trustee Chair in Chinese Business and Economics at CSIS. Scott, it's great to have you here. Obviously, we can't kind of underplay the significance of what we heard over the weekend. What do you think was sort of the key sort of message here? Is this deal good to go?
I think it's likely good to go. We still don't know all of the details because the Chinese have been pretty quiet about what they've committed, and we've not really heard from the U.S. what they've committed to do. So there's still some news to learn. But I do think that the signals and breadcrumbs that have been sprinkled are positive, and so I don't want to rain on markets parade, but we'll have to see. And this probably means that we'll get a few months of stability in the relationship, and folks who are in agriculture and shipping and use rare earths should be happy about what's likely to transpire when the two leaders meet later this week.
Scott, I think you hit the nail on the head there. I wonder is it a reason to be pessimistic or measured? Let's put it that. Is it a reason to be measured that we haven't yet heard, to the extent that we've heard from the Americans, we've heard from the Chinese?
I think so. Sometimes this U.S. administration over-advertises the depth and breadth of deals. We heard that in Secretary Bessent's comments that you played. He said some kind of delay. Is that going to be a delay that covers dual use or everything? And so what will the size of the purchase of soybeans be? Will fentanyl tariffs go down simultaneously with China's implementation of their commitments? Those are things that we have to learn. And of course, there's a lot of things that are very important to the U.S. And other countries about China's economic behavior, which don't appear to be part of the ongoing negotiations.
There is also this sort of interpretation that the U.S. export controls will stay. We haven't heard that from the Beijing side. I'm just wondering, Scott, what are you hearing right now?
My sense is that if China is going to announce that they are delaying imposing their new rare earths export control regime, we're probably going to see the U.S. do something similar with regard to the 50% rule that they announced at the end of September, which caught the Chinese by surprise, at least the breadth of it. And so in some ways, what we may see on Thursday is the fourth taco, where the Chinese countered and got the U.S. to back down to find some amount of stability. And that's good in the short term. It doesn't address the two countries' fundamental disagreements about economic fairness and about economic security, but it does keep us from going over the cliff.
Scott, we heard from Marco Rubio that Taiwan was not discussed. Is Taiwan off the table, you think, completely, at least as far as this round is concerned?
My guess is it's unlikely to be part of an agreement, because I think in the conversations they've had over the past few months, I think the Chinese were fishing for a greater commitment for the U.S., both in terms of language and arms sales and other things. And I don't think the administration gave way. And I think the Chinese actually still like or find more acceptable some of the specific things the administration has done in the last few months with regard to Taiwan. And so I don't think they see that as something that is pressing, that must be achieved. That might wait, perhaps, if they meet in the first quarter of next year in China.
What are you going to be looking for? Specifically, when we do see those pictures of Trump and Xi at APEC, I mean, what is going to confirm what we're seeing now, you think, and what's going to be most influential and, I guess, more impactful for markets, Scott?
Yeah, I want to hear specifics about the various elements that have been discussed regarding fentanyl. What are the Chinese saying they're going to do? And will the tariffs that the U.S. has imposed, those 20% tariffs, come off now, or will it be dependent on future Chinese actions and results? And then I want to see what kind of, if there are dollar numbers to the sales of soybeans. Is TikTok, will both sides say that TikTok is a done deal? And will there be some more clarity and specificity about when President Trump will go to China? Or is that still something that is just potentially going to happen, but not really laid out in stone?
Scott, you mentioned the U.S. side, might tend to over-advertise, obviously a bit more measured and cautious on the Chinese side. What I'm trying to figure out early, and who knows what the week will hold, is what the Chinese side got from all of this. What do you think? What do you think they walked away with?
My guess is a commitment for the U.S. to pull back some of those fentanyl tariffs and probably delay the 50% rule on subsidiaries of companies that are already on the entities list that weren't originally covered. That seemed to be the two most likely areas where they got something, but we'll have to see. There's a lot of specifics, a lot of individual market issues that they've been talking about, and so a lot of different things could come out of this. But I want to emphasize, we are not talking about China changing its industrial policy, rebalancing its economy, issues that the U.S. has had for a long time. If you look at the recent summary of the forthcoming next 5-year plan, China is really not changing course in terms of emphasizing technology. And so a lot of these bigger issues are still going to be with us and affect the relationship for quite some time.
Yeah, well, as they say, the long road to recovery. And Scott, the reason I frame it that way is we understand you just finished a marathon. You stayed up for us. How'd you do, Scott?
I did all right. I was happy. Marine Corps Marathon, 4:09. Yeah. So for me, that's personal best for this marathon. Man. My legs are unhappy with me, but I'm glad I did it.
Well, and you can still make it on the show afterwards. Amazing, Scott.
Thank you.
Thank you. Scott Kenny there, Senior Advisor and Trustee Chair in Chinese Business and Economics at CSIC. Have a nice rest, please. Coming up, we're going to be live at the Bloomberg Business Summit in KL, speaking with the former Philippine Central Bank Governor Benjamin Diokno. We'll discuss the outlook on rates, governance issues that do threaten potentially to stunt the economy. We have plenty more ahead. This is Bloomberg.
Welcome back. You're watching The China Show. Not partaking of this party today, and something that we've seen really recently is the underperformance, and we're down across the benchmark in Manila today. This is going to make sense in a couple of seconds. Avril Hong is with us out of KL with her next guest. Avril.
What a segue. I try to provide some of that illuminating context for you, but when it comes to emerging markets, I mean, we've been keeping watch on some of these Southeast Asian economies, right? The tariff impact, a lot of them are very exposed to the external environment, and how does this play up with monetary policy? Joining me exclusively now is Benjamin Diokno, Monetary Board member at the Philippine Central Bank. He was, of course, also former BSP Governor. Dr. Ben, really great to see you.
Thanks for having me.
In Malaysia. The last time we spoke was actually in the depths of the pandemic, so it's been a long, long time. And a lot has changed since then. We now have Trade War 2.0. I wonder, given the tariff backdrop, what is your sense of the Philippine economy? Can it avoid a slowdown next year?
I think it will slow down a little bit because of the uncertainty due to trade uncertainty and, of course, the construction controversy in the Philippines. So there will be some kind of adjustment. So I see 2026 as kind of a transition period. But I expect the president to fix this quickly and boldly because he has 3 more years in his term. And the Philippine president usually has a 6-year fixed term, no re-election. So thinking of your legacy, you got to fix this.
You're alluding there to the government graft scandal, and your colleague, the BSP Governor, Eli Remolona, has talked about how that could crimp private investments. Is that what you're seeing as well, and to what extent?
Yes. First of all, government construction will slow down because as they fix this problem, they have to lay off some people, change some rules, etc. But also the sentiment of investors has actually changed a little bit. And so I think a big part of 2026 will be a transition period. So we will probably be able to recover from this mess by the end of next year. And 2027 and 2028 will be good years. We'll be on track, back on track.
What do we need to see for there to be, in your words, recovery from this mess?
Well, he has to strictly enforce the budget rules because actually Congress mangled his budget, what I call the president's budget. He has to quickly give signal to Congress, respect my budget. So I keep saying the real test will be what they will do for the 2026 national budget. So, and then, of course, the implementation. You need new people, new rules, etc. And then, of course, that if his bold actions, with his bold actions, hopefully will recover the investment confidence.
So your sense is that this is something that can be fixed. It just might take time, and to your point, maybe something that's cleared up by the end of next year. But in the interim, between now and then, do you see complications for Philippines in terms of raising money? Does this affect its credit rating?
No. In terms of raising money, we don't have problems with that. I think it's really the implementation and the sentiment of investors. Those who are already invested in the Philippines, maybe they will postpone a little bit their expansion plan. And for those who are still planning to come in, they may have to evaluate based on what's happening. Right? But as far as raising money, I think we won't have that problem.
In terms of monetary policy, do you expect to support a December rate cut? Is that something you would be backing?
We're still on an easing cycle, so we just cut it 25 basis points last October, and there will be another meeting in December. I would expect another 25 basis points cut. Okay.
But there are some estimates out there that the Philippines does have more room for easing. Some say 50, 75 basis point. Is that not part of your calculus?
That could be part of the calculus, but it depends on the timing. It could be 25 basis points in December, and the rest maybe sometime next year.
What would it take to trigger that ensuing rate cuts?
Well, we love to say that we are data dependent, and so usually we look at that data on growth and unemployment. And of course, inflation is pretty much under control. In fact, we're below our target range. 2%, we're below 2% right now, and we expect to be in the middle of that range up to 2027. So as far as inflation is concerned, we're okay. So it's really growth and employment.
What do you see in terms of the tariff impact? I mean, for the Philippines, maybe it's not the direct impact on exports demand. It's more about the second order effects. Yeah. How are you seeing that playing out in the Philippine economy?
The Philippines is not as open as other Asian economies, like maybe Malaysia and Singapore. So I think trade as part of our growth strategy is not that huge, right? We're not a big trader country, so we're not much affected by it. We are, of course, affected by the secondary effect, as you mentioned, but not as much as the other developing countries in Asia.
So not much of an impact. What about the impact on the currency? Do you see 59 to the peso? Some talk out there about potential further weakness as well.
You know, the BSP does not target a specific rate. We have adopted a free exchange rate, floating exchange rate. We only intervene if the adjustment is persistent, and it could affect our inflation target. But right now, we're very comfortable with our huge international reserves, something like 109 billion. That's equivalent to 7 months' worth of imports. The received doctrine is 3 months' worth of import is enough, so we're okay.
You remind me, I want to pick up on the point on gold reserves, but I think we'll save that for our panel later on at this Bloomberg event. For the moment, Dr. Diokno, has been great to chat with you. Thank you so much.
Thanks again for having me.
Benjamin Diokno, Bangko Sentral ng Pilipinas Monetary Board member. Guys.
Yep, it's good to see him back on the airways there, of course. So thanks to Avril for bringing that interview for us out in KL. And as our trade conversation continues in the next hour, we're going to be having that conversation with the former U.S. Assistant Secretary of State for East Asian and Pacific Affairs here, Daniel Kritenbrink. We'll also have more coverage from Malaysia with our guests from Khazanah Nasional and CIMB. This is Bloomberg.
Okay, we are just getting some, while you look at some of the shipping names on the screens, and the reason we're looking at that is because of what was discussed at the ASEAN meetings on the weekend, and we're now looking at live pictures, of course, also of KL and the airport there. We understand that U.S. President Trump is set to, of course, move on from progress, dare we call it that, from those discussions in KL, and I think he's about to make his way to Tokyo for his next stop here, Asia-Pacific stop.
Yeah, in terms of how markets are interpreting this as a pretty significant de-escalation of the trade relations between the U.S. and China before, of course, he embarks on Air Force One to head to Tokyo, of course, and he's going to be meeting with the new Japanese Prime Minister, Sanaya Takaichi. And certainly it's going to be a really interesting meeting there, given the fact that they did speak on Saturday to lay out the groundwork of this upcoming in-person meeting. And, of course, she's fresh into this new role. So she is determined to elevate that Japan-U.S. alliance to even greater heights as well. So from KL all the way to Tokyo, we'll be tracking the president all this week. You're watching The China Show. There he is.
All right, we are taking you straight back to Malaysia, where U.S. President Trump, as you can see, is about to board.
No dancing.
No, well, we don't know. Maybe one was enough. Of course, as he of course descended into Malaysia there for what looked to be very largely successful talks, of course, with many of the trading partners. And his next stop will be on to Tokyo, where, of course, our man on the ground there is Stephen Engel. He'll be covering, of course, that. So we've got the story covered for you from all across the Asia Pacific.
Markets are dancing, though, right, Dave? When you talk about what came out of KL in the last 2 days as well, it seems to be some consensus, some sort of trade deal that is going to be all systems go as, of course, the top trade negotiators bring that deal to President Trump and Xi for its final confirmation there as he steps into Air Force One heading to Japan. So welcome back. What a day to launch our new set here at the China Show. And you know how markets are concerned. We talk about it, right? Momentum is back in quite a big way here. When you take a look at how the fanfare there you're seeing in KL, looks like those good vibes are continuing here, especially how you see the offshore market is doing here. Hang Seng up 1%, Dave.
Yeah, well, taking off, really. We're borrowing that from Air Force One, which is about to take off to markets right now, where we are at a record high on MSCI Asia Pacific. Coming up on your screens very shortly is really a look at the Nikkei, which is now trading for the first time ever 50,400 on the Nikkei, leading the charge across the Asia Pacific. A lot of these, of course, are very momentum and growth-driven equity markets. Kospi is topping 4,000. The call from JP Morgan is 5,000. The bull case is very likely to happen there, and Taiwan is also better by about 2%. Flip the page, please, if we can, and have a look at that as we follow the U.S. president around his Asia tour, and all roads will lead to Korea, where, of course, that big meeting is set to take place with U.S. President Trump and Chinese President Xi Jinping, and what they can work out, the meat and the bones, following the framework agreement that was agreed on over the weekend.
Yes, everything from soybeans, shipping levies, they talk about fentanyl. I think those are some of the clear-cut sort of things that came out from the U.S. side. I think there's still a lot of lingering questions on what we got and what we heard when it came to export curbs, right? Is this really going to be a deferral when it comes to export curbs around rare earths? And what about the tech side from the U.S. as well? We didn't get too much in terms of clear-cut details on that.
No, and that's really where the gap of information is right now. I think for markets, that really is perhaps where you will find either your risk or opportunity, because as Yvonne is pointing out, right, so we've heard a lot more details on rare earths. 1 year was a time frame given as far as the pushback was concerned. Nothing so much from the Chinese side of things, which is, and really we've been spending a lot of the morning, and we will be spending more of the program asking our guests really what they expect specifically from this meeting that will take place, really also to inform us of what this relationship looks like beyond this meeting we've been counting down to for months.
And we can't sort of underscore just how crucial this week is, not just in terms of the diplomacy front, right? You talk about what else is happening in terms of macro risks, right? You have Fed, Bank of Canada, BOJ. They're all going to be meeting here this week as well. So I think 4 of the G10 are going to be having meetings here when it comes to monetary policy. The Fed's supposed to cut as well. And then you also have the mega cap, the Mag 7 is going to be reporting as well. So it's a busy, busy week, not just in the U.S., but also here in Asia, too.
Yeah, I think it's the busiest earnings week as far as the number of firms reporting in the Asia-Pacific. 500 this week, right? So there's that. It's going to be the busiest earnings day as far as China goes on Thursday. So, I mean, this Thursday is probably when I'm going to call in sick.
Please don't. I'm going to be in Korea. Yeah. We need you here holding down the new fort.
That's where all the news is going to be. So I can imagine now what Thursday looks like, right? So you have a Fed decision. I'm speaking Asia time. Fed decision at 2, 3 a.m.
There's a Barclays forum, too.
There's the 5 of the Mag 7, I believe, reports Wednesday, Thursday.
I think 3 of them actually report 2 hours after the Fed. So.
And then you have the BOJ.
Yeah.
And at some point, you'll be freezing in Korea waiting for this meeting to take place. And then we get to the BOJ. And hopefully, we were looking at November 1 as the deadline for China. And hopefully, we don't need to talk about that. In other words, we've taken that risk off the table. But yes, you have top trade negotiators for the U.S. and China say that they have come to terms on a range of fairly contentious points.
Those soybeans were always going to be on the market. It's a global market. The 3 leading suppliers are Brazil, Argentina, and the U.S., and I believe that we have brought the market back into equilibrium, and I believe that the Chinese will be making substantial purchases again. Anticipating that we will get some kind of a deferral on the rare earth export controls that the Chinese had discussed.
Okay.
But again, this will all be, my counterpart, the vice premier, and I have set the framework, and it will be up to the 2 leaders to discuss the final terms.
All right, let's bring in our China correspondent, Min Lo, to break this all down for us here. So what did we reach a key consensus on? What's still missing right now?
Yeah, overall, it seems like a very productive weekend, at least from the Chinese side. The Commerce Ministry saying it was in-depth, it was constructive, and there were a list of things that they sort of had a framework consensus on, right, ranging from agricultural imports to fentanyl to shipping levies. The Chinese readout was a little bit vague. They talked about the key themes, but we don't really know what the Chinese is getting out of this deal. The U.S. side has been a little bit more outspoken. They've been saying that China is going to buy a significant amount of soybeans, that they're going to defer the implementation of those rare earth export controls by a year. But I can't see China really agreeing to all of these without some big concessions from the U.S. But so far, the U.S. is saying that they're going to keep their export controls unchanged, even though they're going to sort of remove all those threats of extra additional 100% tariffs on Chinese goods. So what else is China getting out of this? That is not so clear at this point. And certainly China will want the tariffs to come down, to be on par with other countries. That's also something to keep an eye out for.
Yeah, but the starting point on tariffs, though, was Donald Trump ratcheting up that rate, and then if that comes out to be the only win, that's a bit of a mental exercise for me. Ukraine and Taiwan, where Marco Rubio said Taiwan wasn't on the table. Was it on the table? Is it going to be on the table?
Well, we were hearing different things. So Marco Rubio said that it's not going to be on the table, but President Trump on Air Force One kind of left it a little bit open. He refused to answer the question directly from reporters, saying that he doesn't want to talk about it now. The trip is already very complex as it is. But he's sort of less definitive about this. So possibly it's still going to be on the table, because President Trump did mention that he wants to talk about the Ukraine war and get to a peace deal on that with China. He wants to discuss the lowering of these purchases of Russian oil, which China has already done, right? Chinese state oil company has been cutting purchases of some of these sanctioned oil from Russia. But bear in mind, analysts are saying that actually China buys a lot of these oil from intermediaries. So while they might cut the direct purchases from the likes of Rosneft and Lukoil, they might get it from other sources, and they might not be willing to do a lot more given the strategic partnership between US and China, unless they get a key concession, possibly on Taiwan. If the US decide to roll back their long-standing stance on Taiwan and agree to to oppose Taiwanese independence, then maybe we're talking about something here.
Okay, yeah, well, that's going to be quite something to look ahead to. Min Min, thank you so much, Min Min Lo, our China correspondent there. Let's get instant analysis right now on the market reaction so far. And as we were just pointing out here, the bulls are out today, this Monday. Mark Cranfield is with us out of Singapore for some color and context. Mark, price action, does this make sense to you, and how long does this last?
Yeah, this is the Christmas rally coming early. I think the surprise.
What's going to ensure it to last, though? Yeah.
I think the surprise for investors over the weekend is the sound bites from the Chinese side as much as I don't think anyone was too surprised that Scott Bessent would sound very upbeat about anything. I mean, that's his job to do that. But it sounds as though China is on board as well, which is a big improvement from where we were last week. I think last week people were very, very cautious. They were worried that Trump and Xi could meet with hardly anything to agree on, and that it might just be a meeting where they say, okay, thanks for coming, but there's no big announcements. Completely different scenario now. It looks as though they will be able to sign off on some meaningful trade issues, which are very positive. And probably most important of all for global markets, it really kicks the problems into 2026. Investors will now be reading this as very unlikely that we will get another big trade problem between the US and China this year, which really clears the way for people to look at the earnings. As you were saying, it's a very big week for earnings. And even after this week, there's still a few more to come. We've still got NVIDIA to come as well. There'll be the big Chinese tech companies to come in November as well. So people can get back to looking at the more fundamental issues for the equity markets, for the other commodity and forex markets as well. And they probably don't need to worry about US-China until 2026 again.
Okay, that's interesting too. Mark, when you look at the fix from today from the PBOC, a 708 handle, we haven't seen something like that since October of last year. What's the message for FX traders today?
I think the PBOC is just doing its part to be part of the overall positivity in terms of China-US. It's been pretty clear that the PBOC has been guiding the yuan stronger, even on days when there was really no necessity for them to move that. Don't forget the yuan is a basket of currencies, and the moves in dollar yuan should reflect the overall moves in G10 currencies. Well, really, there was no justification based on G10 currencies for dollar yuan to be 708 today. They could have held back. But it probably, again, is just to add to the overall picture that China is doing what it can to try and get closer to the United States. The central bank is playing its role in making sure the yuan stays strong and stable, which is what the United States would like to see. So it's all just part of that big picture that China is on side with the US, another confirmation for investors that markets are in a good position.
Mark, can I just ask you about, so I'm looking at my screens, the Hang Seng Vol Index is down, VIX futures are down, they're fairly consistent with the risk appetite we're seeing, but the Nikkei Vol Index is catching somewhat of a bit, alongside, of course, the cash market trading above 50,000. Is there anything I should read into that?
I think more than anything, people have been a little bit caught out with Japan. I think people were exiting that market when they were worried that the LDP would not be able to clearly choose a leader. And in fact, it didn't look as though Japan was going to have a prime minister in the first round of voting. Everyone's got behind Takaichi. The story is developing very quickly. And I suspect what you're seeing is a big catch-up trade going on in Japan, particularly with foreign investors. If you look at some of the numbers in the third quarter, they were clearly exiting the Japanese markets and putting money into Korea, into Taiwan, into other places. It looks as though they're coming back, even though the yen is relatively weak. They're piling money back into Japan. The numbers so far in October are pretty significant. It looks as though October will turn out to be the biggest month this year for net inflows from foreign investors. So all of that means that there's a much more relative activity in Japan than there is in the other Asian markets. And that probably helps to explain, because some of that will go through the option market as well. That helps to explain why Japan is outperforming in that respect.
Mark? Thank you, Mark Cranfield there, kicking off what looks to be a very, very busy week for all of us here. And for subscribers, you're going to want to turn to your terminal for more on what's going to be driving markets here this week. T-Live Go is your function for the latest updates, plus commentary analysis from Mark, of course, and his fellow expert editors there.
Oh, that's Air Force One.
That should be Air Force One taking off and heading to Japan. Plenty more to come. This is The China Show.
Thailand will also begin the process of releasing the 18 detained Cambodian soldiers. We have a responsibility to act in earnest and in good faith, and that we restore livelihoods and protect the well-being of our communities along our shared border.
Cambodia reaffirms a strong commitment to fully and faithfully implementing these joint declarations and to continuing to work closely with Thailand and all our partners to ensure that this peace endures and brings tangible benefit to our peoples.
ASEAN as a cohesive, formidable group did impress him. The things that we do share in common, there was consensus built on the need to maintain our centrality, to continue to engage with the United States and China and the rest.
Very, very busy on the diplomatic front in the last 48 hours, and that's just going to go up a notch, if not exponentially, over the next few days or so. ASEAN leaders just now speaking around their summits in KL. That's over the weekend as we make our way into Tokyo, where President Trump is headed next in a couple of hours, and then into, of course, Korea, where the big meeting between Chinese President Xi Jinping and U.S. President Donald Trump is scheduled to take place for. Right, let's bring in our next guest. Ambassador Daniel Kritenbrink is the partner at Asia Group and a former U.S. Assistant Secretary of State for East Asian and Pacific Affairs. Ambassador, good morning from Hong Kong. A pleasure to have you on the show. Good morning. I understand you're in Shanghai for us, so really what a place and time to be having this conversation. There's a short and there's a longer-term component to these conversations. I want to understand what your take is in terms of what short-term expectations do you have over this relationship between the two?
Well, David and Yvonne, thank you so much for having me on this morning. And we at the Asia Group are obviously following this very closely. But I think we see the readout of the talks between Secretary Bessent and Vice Premier He Lifeng in Kuala Lumpur to be very positive. And I think we're on track for a very positive and constructive meeting between President Trump and President Xi. They've also laid out, it sounds like, a diplomatic calendar over the next year that could portend relative stability in the U.S.-China relationship for the next 6 months to a year. And I think that's very good news overall, especially for the business community.
Can you tell us about, I mean, we've heard consensus when it comes to soybean purchases, when it comes to fentanyl, when it comes to shipping levies, for example. I think there's still a lot of lingering questions about export curbs and where they stand, whether it's rare earths, whether it's tech curbs from the U.S. as well. What is your understanding of what could come out when it comes to the export curbs side of things? And what do you think each side got out of it?
Well, true, Yvonne. I think the devil will be in the details. But again, I'm probably impressed on the upside by what we've heard thus far. I think both sides, after having fought this trade and supply chain war to a relative standstill over the last year, both sides now seem to be focused primarily on stability. I think for the U.S. side, you've seen President Trump. He's talked about he wants to see a resumption in Chinese purchase of U.S. ag products, especially soybeans. They want to see some sort of assurance that we're not going to face these supply chain issues regarding rare earths. And so it sounds like we're on track to have China hold that rare earths licensing regime in abeyance. And it also sounds like for the Chinese, what they're looking at primarily is, I think, tariff relief and a relaxation, or at least a freeze on various U.S. tech controls. So it sounds like both sides are teed up in the near term to get generally what they wanted.
And so, Ambassador, you mentioned it's a good thing. It's a good thing for businesses to have at least arguably the best visibility on relations that we've had, and as far as I can remember, really, in terms of just the stability that you just said will likely hold for the next few months or so. Do you think this will lead to a lot more on the ground, people to people, business to business exchanges that this relationship sorely needs?
Well, I hope so, David. And again, we'll have to see. I guess the way I would see it is I see in the near term a tactical stabilization of the U.S.-China relationship, which, as I said, is probably a good thing. But none of the fundamentals in this relationship have changed. So the long-term drivers that are pushing this relationship into a highly competitive state, none of those fundamentals have changed. So I do think this is not a strategic transformation of the U.S.-China relationship. We're still going to see ups and downs without a doubt. And again, the devil will be in the details for what the two leaders agree to. I think our read overnight is that Secretary Besson and Vice Premier He have agreed on some sort of a framework that the leaders will approve. But Yvonne, to your question, we really have to see what does it mean if both sides are going to freeze some of the competitive measures they've taken against one another. How far back will that freeze go? Will both sides agreed to undo some of the escalatory steps that we've taken? I think we have to focus on that. Another thing that really got my attention overnight is it does sound like the two sides also talked about the fentanyl problem. Of course, I think China has done a great deal to crack down on the flow of fentanyl precursors, but they can and should do more. And if they were to do more, they could potentially get 20% tariff relief. So I think that's quite interesting as well. And then, of course, the measures both sides have taken against one another on shipping have been quite significant. And it sounds like that was discussed, and there's the potential for a freeze or rollback there as well. So again, I think we should expect some continued ups and downs over the next year, but as long as this diplomatic calendar that the two sides have apparently outlined holds, I think that competition will take place within a larger frame of relative stability.
Right, and we've seen a flurry of deals that have happened, in the U.S. with ASEAN over the weekend here, with Malaysia when it comes to chips and the like. And I wonder, if I'm a U.S. company, what's going to be the bigger risk for me? Is it that China's going to retaliate on anything that the U.S. does on trade? Or is there going to be this sort of fight between U.S. allies and their allegiance to whether U.S. and China now? Is there going to be a future potential kind of alliance or the allies that are going to see a bit more of a divergence now?
Well, Yvonne, we'll have to watch that very carefully, but it's been quite striking to me over the past year that really, other than China, almost every country in the region has responded to the Trump administration in quite a positive and constructive way. I give the president a lot of credit for attending the ASEAN summit. I think his trip has gotten off to a very strong start. I think concluding the formal trade deal with Malaysia, for me, is probably the most significant outcome of the trip thus far. I think that is a hugely consequential outcome. I think that agreement is likely to be held up as a model for other, especially Southeast Asian partners in the region. So that is quite significant. And then, of course, the signing of this peace agreement and extension of a ceasefire between Cambodia and Thailand, I think, is also a significant accomplishment. And then you saw the deals that accompanied that peace agreement with Cambodia and Thailand. Those are also highly significant. I noted as well that there was a joint statement issued by the United States and Vietnam. There aren't a lot of details there. I think the two sides are still a long ways away from formally concluding a trade agreement, but nonetheless, I also saw that as a positive sign, and hopefully that will impart some momentum. So I do agree that there has been some tension and concern on the part of U.S. partners in the region regarding U.S. trade policies, but I think the trip is off to a strong start. And again, most countries have engaged the U.S. positively, and if we can continue to make momentum on formalizing those trade deals, that will be, again, very good for the U.S. and the region, and I think for businesses and investors as well.
Ambassador, thank you. Ambassador Daniel Kritenbrink, their Asia Group partner, joining us in our Shanghai studios. And later on this hour, we're going to focus a little bit more on trade and really how that impacts the cargo side of things in this world. Qatar Airways cargo chief Mark Drusch joins us here in Hong Kong. We'll discuss global trade tensions and the impact on their business. That conversation coming up next. This is Bloomberg. Welcome back. You are watching the China Show. Dave, we're watching, of course, what's going on in the A-share rally here right now.
Yeah, very consistent to the point that Jason Lui was just making, right? This is really your slow bull market still taking place amidst the volatility over the last, let's call it 2 weeks or so. This one has really been consistent, flat to slightly higher every single week. In fact, so much so that we're now 15 points, flip the page. From the Shanghai Composite topping 4,000 to 40,000. Okay, okay, there we go. I added 1 0 there. But anyway, I know that our audio is actually down for most of you, so you didn't hear that. Shh. 4,000 for the first time in 10 years. Do we get there? Very quickly, about an hour into the session, here we've topped 1 trillion. I get the number right, hopefully. First 40 minutes of trade into the onshore market turn up. Plenty more ahead here on the China Show. This market is rallying and rallying hard this Monday. Plenty more ahead.
All right, we're getting closer to around 11:30 in Tokyo. Japanese markets are heading to lunch break in just a moment. And look, everyone's very happy right now if you're long these markets. We're up 2% for the Nikkei 225. First time ever, right, Dave? We've hit above that 50,000 level for that benchmark as well. Of course, as President Trump heads to Japan after what has been seen as a pretty successful trip in Malaysia.
Yep, he's just airborne, in fact. I think just about 20 minutes ago,
Wasn't much visibility out there, though.
Yeah. Well, it's looking like he's flying into a clear sky Tokyo today.
Yeah.
And of course, our man at the ground is Stephen Engel. He'll be covering that leg of the trip before things get a bit dizzying. And Yvonne leaves me here as she makes her way to Korea tomorrow. But then, because we had the story covered for you. Speaking of airplanes, that's the segue here to Embraer. Of course, Brazilian plane maker is warning that it may see order cancellations and delays if President Trump's punitive tariffs are implemented. The CEO told us that the levies could add $2 million to the cost of each aircraft.
With this additional cost, our customers, they might decide to delay to receive the aircraft they had ordered to us and not to buy new ones. This will be bad for them. This will delay the renewal of the fleets. It will be bad for us and for the U.S. industry, because if we make fewer aircraft, we'll buy fewer equipment from the U.S.
Let's get another take from our next guest. Mark Drusch is Chief Cargo Officer at Qatar Airways Cargo and joins us today here in Hong Kong. Mark, it's great to have you here.
Thank you. It's great to be here. Great to be in your new set over here.
Appreciate it. This is our new soft set.
Yeah.
We only keep it for the special guests.
Almost as big as the Q Suite, but yeah. Anyway.
Close. Yeah.
We were just talking about the complexities of this trade war between U.S. and China here right now. How do you see this really evolving when it comes to, cargo volumes and the like? How is this all going to kind of play out for your business?
Well, at the end of the day, the U.S. and China are always going to have a very rich and deep trade relationship. You can't avoid that. It's just a matter of figuring out what it's going to look like, and then we'll get back to a new balance and new stasis, and then we'll continue to move on. I mean, you know what's very interesting is Chinese exports have really increased this year versus last year. Just where they're going has changed a little bit. And despite what a lot of people think, exports between China and the U.S. are they did disappear. They're just at a lower rate now until everything is settled.
What have you seen in your business specifically into a window in terms of cargo flows? Because you have a very unique perspective to what's going on.
Because of where we sit in Qatar, we sit in the middle of what I call the modern Silk Road. So we see all the travel back and forth, both for the passenger side and cargo side. Yeah. What we saw this year is a lot of capacity was shifted from the Transpac, China to the U.S., into Europe. So what we saw is demand in Europe was up a little bit, but most importantly, prices were down a little bit because there was a lot of capacity that went in. For us specifically, what we saw is growth in our traffic from China, Hong Kong, Macau into the GCC and into Africa. So we've seen a little bit of a shift of the market as Chinese exporters have had to adjust to the slightly less demand in the States. They've had to focus on additional markets.
So are those the best opportunities for growth for you guys? Right
well,
now?
Actually, the opportunities for growth for us are still really strong. I mean, keep in mind one thing, and you guys follow this as much as we do. The global economies are still very strong.
Trade is so resilient.
Trade is resilient. Knock on wood. You don't have wood here. Yeah. Knock on wood. The global economies are very strong. The GDPs, all the major GDPs are actually slightly up to a little bit even more than up since last year. The Chinese GDP is up. The U.S. GDP is up. Your UK GDP, India GDP, all all the GDPs are still very strong. So we expect once all of the trade issues are resolved, as I said, we'll get to a new stasis, a new balance, and assuming that the GDPs continue to be strong, we expect cargo next year to actually do quite well again.
Is there a sense, though, that we'll get some payback because of potential front loading of these trade numbers? I mean, can the momentum continue through the trade deal and beyond?
Yeah, I think it's a very good question. I do think you will see a period of time once the trade deals are resolved. You'll see a refilling of stock, if you will, and that we could see a nice big jump. And that's really for the Transpac carriers, the carriers that are operating between the Asia and China in particular and the U.S. We're not really a big player in that market.
When you make kind of long-term planning then, how do you look at these kind of changes in geopolitical influences, what customers need? To what extent is what are the things that you're doing and planning is permanent and what's not permanent?
That's a great question. And in fact, as part of what we do every day, there are two things to keep in mind. Number one, we at Qatar Airways, both the passenger side and the cargo side, we're very agile. You saw that during COVID as an example, what we did passenger side and cargo side. So agility is one of the things we're focused on. And our job then on the cargo side is to understand where trade flows are, how they're moving, how they're growing, and then to address them accordingly. The second part to what we do is we look at what are the forecasted GDP growth numbers, and then where do we see the most opportunity, what do we expect the most opportunity to be. But again, that is how we plan it, but then we respond to the actual marketplace by being agile. We actually looked at something recently to see how much we moved our capacity around versus our competitors, and we were much more reactive to understanding how the trade flows move because we want to follow the customers.
Right. So on aggregate, how do all these projections on GDP growth inform you? What is your aggregate growth forecast for the business next year? And within that, of course, where do you see granularly?
I would love to tell you, but we haven't resolved that yet. Our team is right now literally working on it the last couple of weeks.
It's almost the end of 2025.
Yes, it is. It is. But because of the uncertainty in the market, I wanted to get as close as possible to the end of the year so that we don't have wild swings in our forecast.
That's fair.
So we're in the middle of doing it right now. But knock on wood, as I said, GDPs are expected to continue to have a nice solid growth rate. So I don't expect it'll be significantly different.
Can you tell us, I mean, you're a key customer in terms of, I just want to talk about your freight too. You're a key customer in the 777X program, including freighters right now. What's the latest communication you're getting from Boeing on, when this first freighter is going to arrive?
Well, I think Boeing has been very public about there may be some delays, and I think they won't have an idea what any additional delays may be until the U.S. government shutdown is resolved. Because the U.S. government shutdown means that the certification process is slowed down because employees are not working at the same level as they were. So we're waiting to hear, once it all gets resolved, Boeing will be able to give us an idea.
Is that a 2028, I believe? At the 2028
for the freighter, 28 is the right now what we expect. But new aircraft programs can move either way. So what we really have to wait to see when the FAA gets back to full work.
And are you in the market for more freighter planes?
That's a great question. We actually, in the next 12 months, are taking 7 new aircraft. 5 of them are converted freighters, and 2 of them are direct from Boeing.
Right.
So that sort of answers a question you had earlier, David. We are expecting next year to be robust. And part of it, Yvonne, getting back to the question you asked, is we not only look at the GDP growth, but we also look at what industries are growing, what products are growing. And one thing we've identified and we've had really great growth in lately is a growth in high tech and aerospace. And that's something we've focused on very much in building unique products around those so that we can offer something better in those 2 very fast-growing, very important markets. Right. And then that also sort of offsets what's going on with any individual regional GDPs.
Right. Interesting product category there as far as... So what route is that? Specifically, what route do you see that growth in?
Actually, aerospace and tech is all over the place. It's not limited to one area, which is very interesting.
That's good.
And when you think about it, I mean, you've seen all the forecasts for aerospace over the next 10, 15 years.
Right.
It's just going to continue growing as quickly as possible. So for aerospace in particular, it's important that those products, those components are delivered as quickly as possible. Tech, we know there's no slowdown. You guys watch how AI stocks are just driving markets around the world. That's not going to slow down anytime soon. So that's why we said we have to develop very specific products, as those are growth markets that we already are leaders in and we want to continue being leaders in.
Another way that you are building the business is with these sort of partnerships with other airlines when it comes to the global trade lines, whether it's British Airways, Malaysian Airways, and the like. How actively are you now in expanding this pact, and where are you in terms of regulatory, backdrop, environment, and commercial integration?
Great question. You had two questions around our JB, our joint business. Number one is, in June, we announced the joint business with IAG, which is BA, Iberia, and Aer Lingus in Malaysia. We have received already from EU, UK, and US and Qatari authorities the ability to move forward with it. We're waiting for the Malaysian authorities to grant approval. We expect that'll come sometime the end of this quarter, maybe beginning next quarter. We will, once that's all in place, probably in the first quarter, we're going to launch the JB. It's a first global cargo JB. You all are used to the passenger JBs, where you can fly between. This is the first global JB, the first time these very vast networks with unique geographies are linking together. And I have to tell you, it's been a lot of work. And I've done passenger for 30 years. The cargo side's much more complex. So we've spent.
Why is that? I'm just curious.
It's for a bunch of things. And number one, there isn't as much digitalization in this industry. So there's a lot of that we have to put. Operationally, there are a lot of differences because you've got warehouse here, warehouse there. You've got to make sure they're together. Safety and security regulations have got to be aligned. So there's a lot of work around alignment and understanding how to provide the customer that same seamless product you have as if they were just on your network alone. So we've invested a lot of time and energy in that, and we're very excited about it. It will be, like for the passenger side, it will be groundbreaking. It really will open up markets that aren't open today because we'll make it easier for that trade to occur.
Do we have a name for it? Because passenger side is one world, for example. Not yet?
We don't have a name, but if you've got any suggestions, share it with me. I'd love to hear it.
Okay.
Yeah, we'll think about it.
Okay, we'll get back to you then soon.
Yes, yeah.
All right, we'll let you go. We know, of course, you're headed to Singapore next. That was Mark Drusch. Thank you so much, sir.
Thank you.
For coming here and sat with us. That was Chief Cargo Officer at Qatar Airways Cargo. Right, just ahead here on the shows, the South Korean president tells us that someone in Washington actually remains stuck on details of this massive $350 billion investment pledge. That conversation is coming up next. Plenty more ahead. This is The China Show.
Well, South Korea's president says talks with Washington on a $350 billion investment pledge remain stuck on all the major details. We spoke to Lee Jae-myung ahead of his Wednesday meeting with President Trump on the sidelines of the APEC summit.
한미 간의 협상은 이제 안보 분야.
The negotiations between Korea and the United States are proceeding in two areas of security and economics simultaneously. Negotiations in the field of security issues are going very well, but negotiations in the area of economics, especially trade, have reached a preliminary agreement, and we're in the process of hashing out the details. The discussion is ongoing and there are some differences of opinion, but the delay does not necessarily mean that this is a failure. We already have a comprehensive agreement, and we're currently working on the details. So I would appreciate your patience.
일본과의 협상에 있어서는 좀
When it comes to Japan's deal, there have been some divergent interpretations. Is South Korea trying to make it more specific than Japan's? And if that's the case, could that become more burdensome for Korea later on?
대한민국은 일본이 아닙니다.
Korea is not Japan. I do not fully know what deal the US and Japan have struck, but from our point of view, we have our own circumstances, and we will reach a rational result that suits us. Of course, the example of Japan or Europe could be a base that we can refer to, but in the end, we must find a way which takes into account Korea's circumstances, that is acceptable to Korea, and also helps the United States in its manufacturing renaissance. As we search for a mutually beneficial path, there will be differences as well as alignment of opinions.
접점을 맞추는 데 있어서는
In finding common ground, could the size of the U.S. investment fund become smaller?
투자의 방식,
the method of investment, the amount of investment, the timeline, and how we will share the losses and divide the dividends, all of these remain sticking points. The US will of course try to maximize its interests, but it must not be to the extent that causes catastrophic consequences for South Korea. The United States is the leading country in the world when it comes to democracy and rationality. South Korea is an ally and friend of the United States, so we believe that we will be able to reach a rational result that is acceptable to all sides, and this is what has to be done.
한국 기업이 미국에 투자하는 자체도 약간
Even investing in the U.S. seems somewhat unstable, as we saw with the immigration raid in Georgia. We understand Koreans can now work at U.S. factories with B1 and ESTA visas, but when can we expect a more fundamental solution?
I believe we can find a realistic solution to the visa issue in the not-too-distant future. In fact, the visa issue is less a problem for Korea than it is for the United States. Korean firms are taking risks by investing in the United States. As a result, they create jobs and help the manufacturing renaissance. Providing an environment for Korean firms to quickly build their factories will be in the interest of the United States. If there are restrictions on Korean workers who build factories and train employees, this will stall the construction of factories. Thus, it's in the interest of the United States to quickly resolve these issues.
A highlight of the APEC summit is the upcoming meeting between Presidents Trump and Xi Jinping. How important is this dialogue for South Korea?
한국은 지금 공급망을 둘러싸고
When it comes to the supply chain, the world is divided into two blocks facing off each other, one led by the United States and one by China. Korea is situated both geographically and economically between these two. We are situated in between two grinding stones. It's a situation akin to having both arms pulled by China and the United States. This is both a challenge and an opportunity. We cherish our baseline policy emphasizing the Korea-US alliance and Korea-US-Japan trilateral cooperation. At the same time, we do not seek to sever ties or pursue excessive confrontation with China or socialist nations. Korea will continue to cherish and emphasize its alliance with the United States, and at the same time manage its relationship with China.
근데 이미 지금 한화오션의 미국
Already Hanwha Ocean's U.S. subsidiaries are caught in the middle, though. Are you concerned that other Korean companies might become targets too? And do you feel this is somewhat an unfair situation?
한국의 미국 진출 자회사들에 대해서
From Korea's point of view, it's very regretful and hard to understand that Korean subsidiaries in the U.S. have been sanctioned by China because we were cooperating with the United States. It's highly likely that this is China's way of applying pressure, signaling that such incidents could continue to occur in the future. Despite this, we'll continue to pursue our basic stance, which emphasizes the United States while working to maintain good relations with China. In any case, we will not directly face off against China. On the outside, it might seem that the United States is very confrontational against China, but at the same time, they continue to ceaselessly communicate and cooperate in areas where possible.
The Bank of Korea has left interest rates unchanged again. If there are no more rate cuts, will the government need another extra budget?
Regarding the economic situation in Korea, the interest rate is not the issue. Rather, it's more a matter of fiscal policy and economic policy. From these three, I believe a stable economic policy is most important. Next would be the fiscal policy that supports economic policy. If we were to lower interest rates, this could stimulate real estate prices, which is already an issue for us. The BOK made the right decision by keeping rates unchanged instead of cutting them. In order to revive Korea's economy and ensure sustainable growth, the fiscal policy of the past may not be sufficient, but it's not lacking either. With additional measures such as expansion of productive financing in areas like high-tech development, which we're focusing on, we'll be able to build a foundation for economic revival and sustainable growth.
너무 신기한 게 요즘에는 부동산 투자를 많이 했잖아요. 저희 부모님도 항상 집 사라.
What's surprising is that people invested heavily in real estate, and even my parents always told me to buy a house first. But now they're saying I should buy stocks. How do you view this new trend of growing assets?
The truth is, the Republic of Korea is sitting on a very dangerous potential crisis, a ticking bomb that is excessive real estate investment. Just look at Japan. Its real estate bubble burst more than 30 years ago, and the country is still dealing with the economic pain today. Unfortunately, Korea is heading down a similar path. Our property prices are among the highest in the world. If this trend continues, the bubble will inevitably burst. When this happens, it won't just be an economic crisis. We'll face a severe crisis not only economically but across all sectors. We must prevent that from happening. That means creating channels for capital to flow into more productive sectors of the economy. That's why I've been working hard to remove unnecessary regulations and irrational barriers in our capital markets. We're beginning to see the results. Funds are gradually shifting from real estate into financial and capital markets, and public trust in those markets has improved significantly. You can see the results reflected in the new record highs of the KOSPI index, levels we've never seen before. We need to stay on this course. If we continue implementing national policies that curb speculative real estate investments and direct capital towards productive areas, we can sustain this positive momentum. That's the only way to normalize the Korean economy back to a healthy, sustainable path for growth. We cannot give up on this path.
And that was the South Korean President Lee Jae-myung there speaking to Bloomberg ahead of his meeting with President Trump later on this week. And if you are a subscriber and want to rewatch that interview, you can watch it, of course, through our interactive TV function, TV Go. We got plenty more ahead. This is Bloomberg. All right, taking you back to live pictures out of Kuala Lumpur here this morning. You just saw those live pictures of Li Qiang, the Chinese premier, is there. About to start off with this kind of ASEAN +3 summit there, of course. So that is underway, and you are seeing him being rolled out the red carpet for, of course, the premier. This on the back of what we saw, this framework of some sort of trade deal between U.S. and China that was ironed out at KL. And the next stop, of course, is Japan, where President Trump is currently en route to the country after leaving Malaysia. And there you go. We continue to see onward there with, of course, the premier. Let's get to our Chief Malaysia correspondent, Stephen Engel. He joins us now from Tokyo on the ground, awaiting the president. Steve, what's on his agenda today?
Well, awaiting patiently, obviously, President Trump will be leaving Malaysia, late morning his time, will be arriving here in Japan just after 5 p.m. Local time. I'm standing in front of the state guest house at the Akasaka Palace, where I was here as well the last time Donald Trump came here in May of 2019. We saw the beast roll by. I'm talking about the car, of course, with Donald Trump inside, going inside and meeting then Prime Minister Shinzo Abe. This time, we can't necessarily confirm that he will be coming here to Akasaka Palace, but it is where the state receptions are usually held for these official meetings, bilaterals, which are scheduled with the new Prime Minister, Takaichi-san. Obviously, they probably will have the most interesting dynamic ahead of course, Donald Trump meeting Xi Jinping on Thursday in Gwangju, Korea. This one will be very interesting. She's new on the job. She is said to admire strong nationalistic leaders. One of her heroes is Margaret Thatcher. She wants to rejuvenate the Japanese nation. She wants to rejuvenate military spending. She said already she wants to accelerate by a couple of years upping of the defense budget to 2% of national GDP ahead of schedule. That is even something the Trump administration has said might be too conservative. So there's lots to be seen on the Trump-Takaichi-san dynamic here in Tokyo.
All right. Fantastic.